On a whole issue of culture in our industry, obviously a critical issue. When I run my firm is a wealth management firm. I've had three, just so you know who I am. I wanted to be a newspaper reporter, was a newspaper reporter, went back to graduate school, and have had three 10-year stints in our industry. One as an investment banker in the public finance department, structuring municipal bond investments. One as the CEO of an asset management firm, a mutual fund and institutional asset manager. And then the third running wealth management business, which is retail brokerage. That's the modern day term for wealth management, which I do today for the Royal Bank of Canada in the US. And I've said all along, I think culture is everything. It's not enough to succeed. It's not enough to have the right culture, but if you don't have the right culture, nothing else is possible. You absolutely have to get culture right. My first book, which I wrote, which was published in 2012 by Wiley, Jack Bogle wrote the foreword, Charlie Ellis wrote the afterword, was called Stewardship. And the whole book was about culture. It was about culture as it relates to what I think the core principle underpinning our industry ought to be, and that is stewardship. There are lots of different definitions. It's a religious word, it's a secular word, but the definition you find in Wikipedia, take it for what it's worth, is responsibly managing what others have entrusted to our care. And I think that sums up what the financial services industry ought to be about. The underpinning of our industry ought to be the core principle of stewardship. And frankly, what we did was we lost we lost sight of, and we got away from that core principle in the years leading up to the financial crisis, and I think it was a major, not the only, but a major contributor to the problems that we had. Just to help Ashwin segue to the next part, so I was one of obviously many, many people during the first 5-7 years after the crisis to be looking backwards, pointing fingers, assigning blame, engaged in sort of forensic deconstruction, what went wrong and why. When I walked into the meeting room for the Future of Finance Initiative, what I saw and heard aligned with what I thought we needed to start doing, and that was stop looking backwards and start looking forwards and start having a forward-looking and constructive conversation about what do we need to do to have finance, broadly speaking, the financial markets, financial sector, financial firms, people who work in the industry be forces for good, i.e. support positive social outcomes instead of creating the kind of havoc we created in the mid-2000s. And that, it was really sitting in the meeting and watching other like-minded folks and seeing the CFA gear up behind that constructive, forward-looking conversation that galvanized me to write the book that some of you, I guess, have received today.
Thank you, John, for mentioning it. As you all know, that when you read about the future of finance, it talks about what we're going to do forward thinking. It doesn't go back to the past. As a matter of fact, we hardly ever talk about what led to the crisis. That's already passed, that's given, we need to move forward.